Good morning, everyone. Welcome back. Today, before starting our in-depth analysis, I will quickly summarize the main takeaways of this video right here, since your time is precious. So, Tattooed Chef is a growing plant-based food company primarily offering a broad portfolio of innovative frozen food products, where the company grew rapidly in 2020 and in 2021, but a lot of problems arose in 2022, with a weak financial position, bad management, and significant solvency risk. So, is Tattooed Chef a turnaround play or is it going to zero? When looking at this DCF model, we can see that currently there is around a 330% upside from these current levels, but will Tattooed Chef survive to see them? Well, I'll deep dive into this problem in this video, so make sure to stick around to the end. And remember to like and subscribe if you enjoy the content, as it helps a lot and it's free to do. If you're new here, to analyze equities, I will use a 6-step valuation process which consists of the steps shown on the slide. Additionally, the DCF model used for the price target will be available to download in the description below. So what is Tattooed Chef? As previously stated, Tattooed Chef is a leading plant-based food company offering a broad portfolio of innovative plant-based food products with a focus on US frozen food market. On the slide, you can see the large total addressable market that Tattooed Chef is in that could maybe be infiltrated in the future. One bullish point for Tattooed Chef was its aggressive expansion in distribution. On the slide, you can see the aggressive growth in product line and distribution locations that occurred between 2020 and 2021. However, the problem came with 2022, where growth slowed down, costs increased, and management trust collapsed with a bad track record for execution. For industry analysis, we can see that currently Tattooed Chef is gaining market share. This is happening from new product iterations and aggressive marketing. And when focusing on the main players of frozen food brands, we can see that these companies on average have weak profitability, fast growth, and are mostly around 100 to 200 million market cap, with on average less than 1,000 employees. Diving deeper in the comparison, we can see that Tattooed Chef has had weaker revenue growth compared to competitors, with weaker gross margins, and this led to the highest short interest of 32%. So, as you can see, there are a lot of players in the market positioned in case Tattooed Chef goes bankrupt. And when looking at these comparisons, we can see how this massive drop in stock price happened, with disastrous financial results for 2022. Is Tattooed Chef solvent? Well, let's check it out. The financial situation of Tattooed Chef currently is unhealthy. They have a cash and cash equivalent of 14.2 million, with a total debt of 44.7 million, with a long-term debt only being 1.2 million, so a low amount of the overall outstanding debt. They have a quick ratio of 0.45, so even with the large inventory that they have, they might not be able to sell it in time. So, Tattooed Chef has a high risk of insolvency when considering that this quarter they lost $38.5 million and they only have $14.2 million in cash and cash equivalents. Therefore, even though Sam Galletti, the CEO, put $5 million more of his own money into the company, and they still have around $20 million more of credit lines, will they be able to raise more cash to survive? Will they get bailed out? Or will they dilute their shareholders to death? Because they will need to do something to keep the company running. And when considering that 10 million shares could get dumped onto the market, shareholders will most likely get heavily diluted. So, right now, the balance sheet is not good, and if they can't turn around the core problems of profitability and growth, they're in a very sticky and dangerous situation. There are a lot of risks present right now in Tattooed Chef. The first is, of course, the macroeconomic factors with inflation and recession that's hitting every company and is one of the core reasons why Tattooed Chef really struggled in 2022. However, as a company, having prevalence in retail is very complicated because it's a super competitive market, and Tattooed Chef is required to keep their revenues up to have a very high marketing expense. And this is one of the big problems, that they can't be profitable. Additionally, with a really bad managerial track record of this year, can they steer the ship back around? And will Tattooed Chef survive? These are major risks that ideally you would not want to have in your investment portfolio. For competitive advantages, Tattooed Chef has three main ones. The first is its brand awareness. Since it's an early mover advantage in these plant-based frozen food alternatives, and with its vast distribution in the US, Tattooed Chef's name is already out there. Secondly, Tattooed Chef's vertical integration is a key differentiating factor. It is leading to current higher upfront costs. So if they survive this year, then the long-term benefits of this vertical integration should pay well. Thirdly, the fast integration of the product line is really good. From concept phase to shelf, it takes only 3 months, which allows for Tattooed Chef to be flexible in case there are demographic shifts in the demand. However, do these advantages outweigh the risks? Well, it's something you should personally reflect on before making any significant decision. Tattooed Chef's CEO is Salvatore Galletti. Before becoming Tattooed Chef's CEO, he also worked in Itella Parent Company, Sonoral Mills, Good Karma Foods, and others. Overall, he accumulated already 35 years of experience in the food industry. From the graph, we can see the value creation from Tattooed Chef's stock, and then the value destruction from the risk-off and bad execution environment. The price target from the DCF model is 6.2. The current price of Tattooed Chef is 1.45, and as a reminder, the DCF model is in the description below. And as you can see from this chart, it's a very ugly chart with a very aggressive sell model. This is flashing out all the long-term investors. And if you see Tattooed Chef as a turnaround play, I would recommend to wait for some sort of consolidation and things to start getting better. There is no need to catch the bottom, but it also avoids catching a falling knife. This is my Tattooed Chef DCF model going until 2030. This DCF model yields a perpetuity approach value of $4 and an EBITDA approach value of 8, with the average being 6.3 and from the current price yielding an upside of 340%. The inputs used to get these values are: I extrapolated the revenue growth, and if Tattooed Chef does as guided, which is 235 million, and survives, so doesn't go bankrupt, I extrapolated the revenue growth going back up to 20% and staying there, which is still lower than the revenue growth they were doing when things were going well. I also extrapolated cost of goods sold, depreciation, and capital expenditures being on the conservative side, and this yields to these values. As a benchmark, management's target for 2026 revenues is 600 million, and my DCF model yields 400 million. So you can see how this DCF model is more on the conservative side. This, with a 17% applicable tax rate due to tax write-off and a 10% discount rate, a 5% long-term growth rate, yields to the perpetuity approach value, and using a 20x EBITDA multiple, which is on the lower end, for low-cap stocks like Tattooed Chef, it yields an EBITDA approach value of $8. And this is my DCF model. In conclusion, Tattooed Chef has a weak financial position. It has bad management and has significant insolvency risks. Therefore, at these levels, unless something significant changes in the next year with the management and the results, Tattooed Chef is not a buy. If you reached the end of the video, you're awesome. And if you enjoyed, please like and subscribe, as it will greatly help and support the channel. Have a good rest of your day, and I'll see you next time.